Hello, everybody. Good. What is today? Today's Wednesday. Good Wednesday afternoon. Yeah, one of those weeks, and especially with the holiday markets being closed on Friday, you never. It's hard to keep track of time. What do we got here today? S&P's down about 70 points right now. The VIX currently at 31, up a little bit on the day. Did trade to about 33 and a half. Uh, Traded down to 29.48. And what we are really, kind of witnessing again here is just what? More policy change, right? We've talked about this repeatedly. We talked about this yesterday in the room quite a bit that, seeing this volatility, seeing the VIX come back down, historically 30 is still a high number, 29 is still a high number. But in this environment here, boy, the quick move that we saw down from the 50 level down here, things haven't changed. The landscape hasn't changed. The news is still coming at us basically around the clock. And, again, we witnessed that yesterday with the announcement after the close about NVIDIA and, taking the chip stocks down, NVIDIA, AMD, ASML, bunch of stocks. And so the NASDAQ we're seeing down over 2% right now. Surprisingly, we have not seen a massive pop up in the VIX. And that could be maybe a little bit of complacency. Maybe people are looking at this and say, okay, this is now the new world that we live in. This is the new expectation. Also, if you guys remember, a number of times we talked about how when the VIX was at those elevated levels, even in the 40s, but then when we got to 50, that historically that's just not sustainable, right? Again, quick lesson. The power of 16s, VIX of 16, 1% move in the S&Ps, 32, 2%, 48, 3%, so on and so forth. Historically, that is just not sustainable. So here we are right now. The Russell's down 0.6%. Bonds are up. 10-year yield is down slightly. The Dow is down 263 points. S&P's 70 points. The NASDAQ now down 350 points. So I asked everybody, thank you, Gene. Can everybody hear and see me okay, by the way? Great. So I asked everybody this morning, what should we talk about in Market Minds today? And what I got was, hang on, share screen, and there we go. What I got was that. Let's talk about volatility. Okay, let's talk about volatility. It certainly is the hot button, right? So we're going to do a little bit of a review here, but don't back away too quickly here because there's probably going to be some nuggets here that are going to be really important to you. What is volatility? It's prediction of future price movements, right? Nobody knows where the market's going to be 2 weeks from now, let alone 2 hours from now. Nobody knows where this volatility is going to be. So what do we base our decisions on? We base it on what has happened in the past to help us try and determine what may happen in the future. And those are the two types of volatility. Historical, that's in the rear view mirror. We take that data and we imply what may happen in the future. Okay, so as option traders, we always focus on implied volatility. What may be the next move? Okay, and we all know that as volatility increases, prices increase. As volatility decreases, prices decrease as well. Okay, so what causes volatility to move? Bottom line is it's supply and demand. It is supply and demand. Okay, and what causes that supply and demand? Well, uncertainty is the big thing. And what uncertainty do we have in front of us right now? We have the uncertainty that at any one point of the day or night, we could see a tweet, we could see another news headline that totally changes not the narrative of the market, but totally changes the new landscape here. Hang on here, guys. Let's see what's going on. It is pretty busy. It's pretty loud here behind me as S&Ps are trending now down to their low of the day at around down 73. So earnings announcements. Okay. And we talked yesterday about in Beyond the Close, we talked yesterday about Netflix, what may happen with earnings coming out after the close tomorrow, and to just stay away from trading any Netflix options that expire tomorrow. Not that you can't put a position on with maybe options that expire next week going out further. Okay. But uncertainty around earnings causes volatility, economic events, geopolitical issues, right? All of those things. But obviously, right now, it's the uncertainty about the tariff news. So this is basic economics 101, guys. When it comes to what causes volatility to move, it is supply and demand. When there is uncertainty, there is a demand for protection. There is a demand for people wanting to buy options. Okay, to have that flexibility for protection, a move higher, whatever it is. And then when things calm down, as that uncertainty goes away, what happens? The demand goes down as well. There becomes an abundance of supply. So when you think about that, this is no different than what may drive the price of a commodity. What is driving the price of gold right now? We're seeing gold at records. It's up what? Couple $100 today. GLD is up $8 today. Okay. What is causing that? Well, uncertainty. People are flocking towards a safe haven, or historically, what has been a safe haven asset. Okay. So it is all supply and demand. Now, check out this chart here, guys. Now, I've got three of these. Okay. This first one is, I believe it's a 6-month chart. Yeah, it goes back to about October. And what this shows is the relationship between the VIX and the SPX. Okay. And it's not hard to understand this relationship, that when volatility is spiking, and the VIX here is in the blue, so that's right over here. When volatility is spiking, that typically is when the market is backing off. The market is on its heels a little bit. Okay. We know that the VIX is usually a contrarian, an inverse relationship to the market. VIX typically going up means the market is going down, vice versa. This is a 6-month look. Okay. This goes back 5 years. No different. Just gives us a bigger landscape here, especially, what happened here. Here's 22. This doesn't take in the beginning of COVID March yet, which we'll get to that in a minute, but you can see this inverse relationship. But what we have to keep in mind is that volatility is mean reverting. Okay. When we see those spikes, and quite frankly, when we see contractions also, although the contractions typically last a bit longer than the spikes do, but when we see those spikes happen, it doesn't typically last a long time. And then here is the lifetime. This goes back to actually '05. Okay, so this is a 20-year look. So obviously, right at the beginning of the chart here, this is the great financial crisis. 11, 12, we see the spike here. The mid-teens, the spike here. Here, obviously, is COVID. And you can see that inverse relationship. Now, how do we take advantage of that, right? The question that I get all the time is, how do we sell this volatility? And we know there are different strategies for that. Now, if you want to look and take a longer term time frame, okay, you can look at selling things that are months out. If you believe there's going to be a big inversion, a big retracement. I don't like trading options more than typically 4, 6, maybe 8 weeks out because of the vega risk, right? What measures the change in the value of an option as volatility changes? That is vega. Okay, we know what delta, gamma, theta, vega is what does that. The further you go out in time, the more vega risk there is. And I would rather trade something personally, and I've been doing this for 35 years, I would rather trade something that I have a better handle on. I've got a better handle on what may happen over the next several weeks or the next, 4 weeks, maybe even the next several days in terms of volatility than what's going to happen 6 months, 12 months from now. So I don't want to take all that Vega risk, even though I can look back historically and say, yeah, this is a time I want to be short that vol, right? So the strategies that we employ are strategies of selling volatility, typically selling iron condors, selling credit spreads. Okay, maybe putting on ratio spreads as opposed to selling that longer term volatility. So hopefully that clears things up a little bit. Let's get that posted up here right now. We will do a word of the day. The word of the day, Hulkster says, is VIX. Okay, it is VIX. And those of you that may want to tune in a little bit later, I believe it's at 2:45, and I'll let the rooms know. 2:45 Central Time. I do have a live interview on Yahoo Finance, and I will actually be standing in the VIX pit. Right now, I'm in the S&P 500 pit. Okay, and interesting because as I'm watching up here, when I'm looking up here, I'm always looking at the big board that's up here. S&Ps now are on their lows of the day, but I would say that the volume out here is not huge today. Okay, I see 800,000 contracts in have traded. That is not huge. That is not huge at all, and we're not really seeing the VIX move in tandem with the S&Ps right now. The VIX is higher, but the VIX is not on its high of the day while the S&P is on its low of the day right now. So kind of interesting there, or near its low of the day. So we'll have to see if that kind of converges back later, if maybe this is an indication that, okay, the market is, again, accepting of this higher volatile state that we're in. Okay. Um, let's take a look. Let me bring up some charts here. Here we go. Okay. AMD. I want to do a quick review of AMD here, guys, because we had this position on, which talk about selling volatility last week. I don't recall if it was Wednesday or Thursday of last week, but when the market was in the throes of major sell-off, and we did see the VIX up around the 50-ish level or so, AMD was trading down on its lows. Okay, a lot of these stocks had really gotten hit, and volatility was through the roof. So we sold this iron condor last week. That is a way to sell volatility. We sold both a call spread and a put spread. Now, why is that selling volatility? Well, when options get expensive, okay, they're getting expensive because vol is moving up. We were able to sell both a very expensive call and put spread. At the same time, looking for AMD to rebound a little bit. We had, as you can see, the put spread on the downside was $3 wide. It was the 85.82 expiring tomorrow. The call side, which just yesterday was actually in the money a little bit, was the 95.99. We actually went $4 wide on the call side, $3 wide on the put side. But because implied volatility was so incredibly expensive, boy, we got a massive amount of premium for this. We sold this. What price did we sell this at, guys? I think I remember we had almost limited or no risk to the downside because of the credit that we sold this at. And we had, I'm going to say we sold this at 280, 270, somewhere around there. You guys can remind me. And actually, we had a resting bid out there to buy back 210 credit. Thank you, Robert. 210 credits. We only had 90 risk to the downside. We had a resting bid to buy this back, to buy half back at $1.40. That, thank goodness, we weren't filled on that yesterday. Even if we were filled on that yesterday, that still would have been a great trade, taking half off. But with the move overnight because of the news on NVIDIA and other chip stocks, the news overnight brought AMD right back down from being in the money on the call side. It was trading up to 95 half, 96 or so, somewhere in that range. Smack back down into the middle of the short strikes, closer to the put side. Okay. But that thing collapsed and we exited out this morning. I think even with the $1.40 bid that most people still had in there, we got filled at what, 55, 60 cents this morning. So something we sold at 210, we were able to take off all our risk this morning. We immediately, after getting filled on the half that we had out there, immediately put out, just close this out, guys. This is like, this is a gift. And of course, I got the questions. Well, if we're right in the sweet spot, if we're between the short strikes, thank you, 60 cents there. Why are we closing this out? And what's the answer to that, guys? It's really an easy answer, right? It's really, really an easy answer. If we're sitting right there, and boy, if we had the foresight, we had the crystal ball to look to where it's going to be tomorrow, and if the stock had closed there tomorrow, it would be worth zero. Why did we close it out? Because that's why you trade, right? There you go, Gene. Hogs get slaughtered. Yes, bulls and bears prosper. Pigs go to the slaughter. Take off the risk. Look for the next trade. Okay. I mean, some people have short memories. Again, it was just literally yesterday at the close that the call side was in the money. Not that that was a bad position at that point. The call side was in the money. Okay. We've got to always monitor that risk, everybody. Okay. Any questions? Anybody want to look at something specific here? Okay. What's going to happen to the VIX? I don't know. It's trading 31.12 right now. Are we going to be higher or lower from here by the end of the day? I think just given what is going on with the flow today and not seeing a ton of volume, I think we're going to be lower than where we are right now by the end of the day. That's just, that's just my wild guess, but I don't have the inside handle on the next tweet that might come out or might change. So NVIDIA, Gladys, yeah, let's look at NVIDIA. Okay, NVIDIA, even though Jim Cramer went out on a limb today and said, you got to treat this like a meme stock now, right? You got to treat this like a meme stock. Get out of it. Do you? Can you? I mean, sure, there's a ton of uncertainty, right? Taking a $5 billion write-off just because the government won't allow them to sell these chips now to China. That's the news that just came out. $5 billion hit on first quarter earnings. Sure, the market has to react like it did. Is it going to dip down to where we were? Hang on, let's down here in the throngs of the lows of the market from a week ago or so? I don't know. Right now, there's probably not a short-term trade that I want to make. For a longer term perspective, if I was going to say, do I want to own this stock come September, December into next year? Absolutely, I do. Right now, you know what? I'm not going to put something out there just to put something out there. But the only thing I would look at right now would be selling an iron condor and probably leaning it with a little bit of long delta to it, meaning something like we did in AMD at the time, selling that put side closer to being at the money than the call side. Okay. Tough one just because of the news cycle. just because of the news cycle. FOMC talk bring down or up? Yeah, James, the answer to that is yes. The answer to that is yes. The FOMC hasn't changed their tune at all. You know, the data that actually came out between last week and then let's call it this week and even this morning is so mixed. The inflation data we got last week, fantastic, right? We talked about that. If that CPI and that PPI number had come out on any other sort of normal news day without the tariff news cycle going on, the market probably would have reacted very positively. So that was a good sign. But the Fed came out and said, yeah, you know what? This is a great number, but how are tariffs going to impact this on the next print, in the next print, in the next print? Okay. And then we saw a really, really surprising retail sales number this morning. The consumer has been kind of on their heels, right? Consumers have been pulling back. We're seeing spending move lower and lower and lower. But the retail sales number that came out this morning defied all odds, way better than expected. So, again, is it because of tariffs? Many people think that consumers are going out there and buying things right now because they're afraid of those prices going up. And then the uncertainty, bing, 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 there's the buzzword. The uncertainty of what may happen with tariffs could drive those prices up and maybe derail the consumer again. Okay. So, the FOMC is not going to come to the market rescue right now as much as the administration would like it to. The administration wants to see lower rates. We know that's not happening right now. That's not a great thing for us, but the FOMC can't lower rates if they believe inflation is going to tick up. That's the bottom line. I could absolutely see a situation where, they come out and they cut a quarter, cut 50 basis points, whatever it is. And then all of a sudden, the next 2, 3, 4 prints that we get on PCE or inflation are through the roof because of tariffs. And Paul, what do you think Powell's going to say? He's going to say the same thing. He's going to say, we're seeing signs of maybe some stability, but the uncertainty due to tariffs is the wild card. He's not going to come out and say their hands are tied, but their hands are tied right now. So I would not expect anything major out of what Powell says. And this is not an official FOMC conference. This is just Powell speaking. So that's what I got for everybody today. Excuse me. This will be the last shot at the VIX here. Putting that up there. We'll get to the wheel shortly. I'm going to cut us a little short today. My voice is pretty much shot right now. Okay, so final call. Yeah, Gladys, I'm not sure that they have that. That is what their goal is. I agree with you, right? Their dual mandate should be bulletproof, but boy, I'm not sure that that there is a recipe for that right now. The market will do something. Right. What do you think, Paul? If you had a guess right now, S&Ps are down 72 points. S&P is going to be higher or lower by the end of the day from here. I'll go higher. But it's awesome though, man. I'll go higher. Like the gameplay is like and again, as a reminder, everybody, if you're going to do something in Netflix, make sure you know what you're doing. If you're doing anything with tomorrow expiring options, since you will not have the opportunity to adjust that. Okay. Please, please, please keep your risk in check. Capital preservation right now. Capital preservation. All right, let me grab our wheel. There it is. That's true too, right? Yeah. Boy, I feel like we're back to square one with the wheel here. Not. Oh man, Jeff Lake. Do you guys hear Jeff? I hear Jeff. Do you hear Jeff coming through here or no, Mike? No. Okay. Just because I've got the room open. Okay, here we go, everybody. Let's see who and what we have got for today. John or Lita? John or Lita? John or Lita? Lita, I think you may be a new winner. This may be a first go around for Lita. Are you in the house, Lita? Are you in the house? You got to be here to collect. Yes, you are. Wonderful. Wonderful, Lita. Awesome. Please send me an email. There you go. Please send me an email there. Prosperswag at prospertrading.com. Oh, shoot. I think I lost you. There. I think my mic I hit inadvertently. Um, I I'm gonna sign off a little early. My voice is shot. Yep, now back. Sorry, that was my user error right here. Um, Tune in Yahoo Finance 2:45 Central Time. I will be back down on the floor. All right, everybody. With that,